We're so glad that you could join us for another exciting Monday in the market where things are swinging back in the right direction anyway as we close out the market today. Joining us to break down all of the exciting stocks that you guys are sharing with us on our live stream today and some of the big stocks that are happening this week with earnings and other big market movers are MarketBeat analysts Chris Marotch and Thomas Hughes. Guys, great to have you both back here today. As you can tell, I am no longer in the mountains. It was a really fun week of doing this from the mountains, but now we are back in the studio at MarketBeat. All right, guys, so it's been a really big week. Kind of surprising to see how big of a turnaround we had this week from what happened on Friday to where we are today. Let's break down what's behind all of these moves.
Right. Well, so last week the market sold off into the week a little bit because of the weak jobs data. It just kind of raised the fear of tariffs and economic slowdown. But what I would say, based on today, there has been a couple of news events helping to spur the market, but we're pretty much blowing that data off in favor of some other items, and we're rallying. S&P 500 still looks pretty good to me.
Mm-hmm. Yeah, let's talk about the jobs data a little bit. That was the big story on Friday that kind of had the market taking that nosedive on Friday. It was the biggest swing that the market's seen since May at least. So that was some pretty big news. Why are we seeing the reaction in the market that we are right now?
Yeah, I think the reaction you're seeing in the market today, some of it has to do with, I think, the fact that the sell-off on Friday was just a little bit of an overreaction. And I think it was an overreaction because in addition to having the jobs number that came out in the revisions, then you had President Trump speaking about it and taking other actions that I think that also contributed to the sell-off. I think the sell-off was overdone. I think the market realized that. And I think that's probably one of the reasons why it's bouncing back today. It's also bouncing back because I think that some investors believe that with the downward revisions we had to May and June, that might mean that it's more likely that the Fed will lower interest rates in September, which on Friday it was starting to look less likely that they were going to do that. Now it's probably looking more likely that they might do that.
Yeah, right. The data last week was really contradictory in terms of the Fed because the inflation data was a little bit hot. And that's definitely at a level what's going to keep the Fed from cutting rates. But then the labor data was a little bit on the cool side, kind of increased the odds. The CME, the Fed Watch tool, has actually increased the odds a little bit to where it's about a 90% chance at the next meeting for 125 basis point cut and about the same 95% chance for 2 cuts by the end of the year, which prior to last week, we were looking at only maybe about a 60% chance for 2 cuts by the end of the year. But there is some risk in that because like we've been talking about before the show started, the revisions to the labor data come pretty frequently. It's entirely possible that the next round of data will include positive revisions. And even without positive revisions, the bulk of the data is still bullish on balance, still shows an expansionary labor market, pretty solid consumer. There are absolutely some concerns, but right now the data still is pretty positive for the economy and expansion and growth.
And that is what we are seeing with a lot of the earnings too. I know we did a video on it briefly this week of prepping for those big tech earnings. So before we get into some of the big earnings coming out this week and some of the names everybody's sharing, I love to see all the names coming in the chat. Thank you guys so much for being here today and sharing the names you want us to cover. We're going to dive into those in just a minute. But first, let's go over, Chris and Thomas, some of the big tech earnings from over last week. It was a huge week for earnings and pretty positive for the most part. Just dive into an overview of some of the big names, the Mag 7 names we saw last week.
Right. So my overview is just like touch base real quick with Microsoft, Meta, Amazon, and Google, all their results. They weren't all the same week, but they all are of a group and comparable kind of exemplifies what we're talking about right now with the strength of earnings. But the 3 words that you can use to describe all these reports are strength on the top and bottom line and blowout results. I mean, they were all very strong, significantly better than analysts were expecting, leading to strong revisions to their forward outlook, pretty much affirmed strong spending throughout the tech and the AI ecosystem. Should be good news for pretty much all tech stocks, but the blue chip leaders, the AI leaders especially, are looking pretty good.
Yeah, Chris, anything you want to add on what you noticed from earnings last week?
Yeah, I mean, Bridget, I think it really, I think it really went a lot the way that you and I thought it was going to go when we did our video last week. I mean, Microsoft did what we expected them to do, which was blowout. Meta did what they were supposed to do, which was blowout. Amazon did what they were supposed to do. Their stock took a little bit of a hit. I don't know if it bounced back today. I was just getting ready to look at that. And then, the one that I thought was interesting, Bridget, was when you and I talked about Apple last week. I said I thought Apple had the low, the lowest bar to clear, but I thought it also had the lowest ceiling. And I think you're seeing that in the stock. It had a good report, but it still has a lot of people questioning, can it sustain that? What's the AI strategy? And so I think you are seeing you're still seeing a little bit of resistance of people getting on board the Apple train, but certainly they had a low bar to clear and they cleared it.
Yeah, really good look. Well, now let's talk about some earnings coming up this week, and then I'm going to get to some of the names coming in on our list here. Let's start with, before we get to Palantir, that's the big one today, let's talk about AMD. Thomas, I know you've talked about this one before, comparing AMD to NVIDIA. You've been an AMD fan, and it looks like the stock is doing pretty well leading into earnings this week. What are you expecting, Thomas?
Well, right. The last I looked today, the stock was moving higher. It looks pretty good to me ahead of the release. All the the stage is set for them to outperform and to provide a catalyst for higher prices. Right now, the outlook is for revenue to grow about 27%, which is pretty strong. But the analysts have been lowering the bar the last few weeks. The expectation is for revenue to be kind of flat sequentially, which I think is not going to happen. I think they're definitely going to grow sequentially. So we have outperformance there. They're also looking for the pace of growth to slow down. I think it's going to accelerate. So that's one catalyst that I see possible in these results, but also the guidance outlook. Even without a really strong report, the guidance outlook should include strength in the pipeline, as well as news about their next generation release, which is due out next year. This is the release that is expected to launch them into a period of really taking market share from NVIDIA. So I think that's another strong catalyst for the stock. If we get both of these things to happen, AMD shares really could really pop. I would expect to see the analysts start to lift their price targets again and provide even more upward pressure to the market.
All right, well, let's move on from AMD to Palantir. Chris,
Yeah,
I know this is one of your favorites. It's happening like right now, right?
No, it dropped right now, and it's a great report. Revenue came in 48. Revenue grew 48% year over year. It had its first $1 billion quarter, just over $1 billion in revenue. They beat on the bottom line. They came in adjusted EPS at 16%. The market was expecting 13%. Here's a big one. U.S. commercial revenue, 93% growth year over year, 20% quarter over quarter. Government revenue up 53% year over year, 14% quarter over quarter. Rule of 40 score of 94%. Let's see. Adjusted income, 46% margin there. Cash from operations, 54% margin. Adjusted free cash flow, 57% margin. I'm still diving into this report, Bridget, but it's a strong report from Palantir.
Really good.
And I would imagine that, the question is going to be, is that all priced into the stock or not? Because the stock was already up about 4% today. So we're just going to have to see if all of that was priced into the stock. It does not look like it was, because it's moving higher.
It's crazy to see, because this company has continued to hit new high after new high after new high. Yep. And a lot of big Palantir fans really believe that the stock has only higher to move. But some people who are maybe new to the company or just are more skeptical investors have been wondering, when is that Palantir bubble going to pop? Some people calling this a meme stock territory with how high it's climbed in such a short amount of time. Thomas, what's your take? Do you think that there is more room for Palantir to climb, especially when we start to see the proof of how well this company does quarter after quarter?
Well, there certainly is more room for the stock to go higher, given the results that it is presenting. If these trends continue, there's really no choice for it but to move higher. I will say, though, that on the chart, the technicals are looking a little bit weak. There was a big potential for the market to have corrected on these results, but it didn't. So momentum has been slowing, volume has been dipping. The stochastic was really not set up very well. but these results have kind of reversed that outlook. So it's possible that Palantir has just crossed an important pivot point. We're going to want to watch it over the next few days or weeks to see what happens. But in this scenario, if we get a new inflood of money, we could see another sustained rally unfold. And based on the chart, it looks like, I mean, it could be a substantial, $90 to $100 move based on what I'm seeing here.
Chris,
Bridget,
anything else coming out that you want to talk about?
There's nothing new that's coming up right now on the earnings report right now. It looks like they guided higher for the coming quarter, so that's also positive. You're probably not going to hear a lot until you get to the earnings call, which won't start until 5:00 tonight. But I'm not necessarily sure if you're going to hear anything more that would be something that's going to move the stock. I think one thing that I've noticed, Bridget, and this is something that you and I seem to talk about every time we talk about Palantir, when I look at the analyst ratings, I see that right now the consensus price target of Palantir has gone to $96. And so again, I keep pointing out to a lot of the retail investors that, if you're trying to make that decision of getting in or not getting in, and you have a long-term focus, that's the key. If you have a long-term focus, the floor just keeps getting higher and higher for the stock. I mean, last year around this time, that floor was probably around $60, and now it's all the way up to $96. So that's saying that, it's not saying that there's no risk in the stock, but it's also saying that that risk is the floor is getting a lot higher on the stock
for sure
than it was.
The analyst data totally agrees with what Chris is saying. Like the market support is improving.
Yep.
The data that MarketBeat is showing right now shows increasing coverage over the last 12 months, plus firming sentiment with more buy and strong buy ratings creeping in, fewer sell ratings, probably about a steady amount of hold ratings, but you got more buys, less sells, and a rising price target. The price target is up more than 200% in the last 12 months. And all of the recent revisions are above 100. Many of them are in the 150 to 170 range. So this market is definitely being led higher. And with these kind of results, you can compare them to NVIDIA, blowout results compounded by blowout guidance. With this trend in place, there's no reason to expect this stock not to keep moving higher.
And I would just I guess if we're going to put a bow on this for now, Bridget, I would just say, I think the number that jumps out to me, it jumped out to me immediately when I looked at that was the 93% year over year on the commercial side.
Commercial, right.
Because you've been hearing a lot of news lately about Palantir and their military contracts.
Right.
But that was 93% on the commercial side. That's an outstanding number. And then that rule of 40 score of 94% is just insane.
Chris, offhand, do you know, or can you see what percentage of the business is commercial? What percentage is government?
So I don't have that information right now, but I can tell you, Thomas, that that I believe last quarter it came out to around 53% was government, 47. So it's getting closer to 50-50, and this may even put it even closer to 50-50.
Right.
Yeah.
All right, well, that's enough Palantir. I do want to let everybody know that tomorrow, Chris and I will be back on here doing another live tomorrow, really breaking down some of the market moves that happen in reaction to this Palantir earnings report and really diving into some of the data a little bit more with more than, just a couple of minutes and a brief look at that earnings report. So Palantir investors, we're going to do a more deep dive into that tomorrow on the channel for another live. So join us for that tomorrow. Let's get to the other hot topic of the day, of the weekend, and that's Joby and Archer. We've had a few people in the chat now today asking to cover Archer. We will get to that one for sure, but we want to start with Joby because that stock had quite a bit of moves over the past few days and some big news too. Who wants to take that one first?
I can give that one a start, but there was really two news events last week that really got Joby stock moving. The first one was probably less important, but still very important, and that's a collaboration with L3Harris, which opens the inroads to government contracts and more government revenue for this company, which is really a good news because government contracts are highly visible and highly lucrative contracts for these companies. But the really big news was Joby coming to an agreement with Blade to buy their air taxi service, right? And so basically what happened is Joby buys or has just bought the infrastructure that it needs to launch its commercial operations in
Yep.
Europe and America. So Blade already operates terminals, lounges, has an operating system to connect travelers with flights, has a recognizable brand and revenue. So Joby is just amplified and accelerated its growth strategy, its come to market strategy, its commercialization strategy. It's already on track to begin operations in Dubai early next year. It will quickly follow that with operations in the United States and with Europe. And what it looks like now is, provided they're able to actually make the aircraft to fill all of these different terminal ports, they could instantly be nationwide. I mean that's awesome. I mean, as far as revenue goes. So once they get their commercial production line really ramping, making these aircraft, putting them out to the terminals and to the different cities and locations where they need to be, they're ready to go. And you got to remember, Blade has been preparing for EVTOL the whole time, right? While EVTOL has been preparing for what Blade does, which is connect inner city travelers to outer city locations. So it's a match made in heaven. It's peanut butter and chocolate as far as stocks go. The fact that the stock, I think it's shot up 20% just today, is just the beginning, I think, of this stock run.
And I noticed, Thomas, that so I know Archer was up a little bit today, but from what you're saying and from what I'm reading, I mean, this kind of leapfrogs Joby over Archer, because some people said Archer might have had a little bit of a lead on the logistics side of it because of the way their business model was compared to Joby's. But now this might be actually something that kind of leapfrogs Joby ahead.
Right. I think it does. And some of the recent analyst chatter talking about EVTOL, just saying that the EVTOL hype's a little bit overblown. And as far as Archer goes, government backing is awesome, but doesn't really fix all the problems, all the hurdles between now and its commercial operations. Looking at the chart, would certainly say that Archer is a wee bit behind Joby and needs to have some positive progression in its development, really, to get the market reinvigorated.
Yeah, let's dive into Archer just a little bit more. The question for people in the chat today is now a buy for Archer? Looking at Archer versus Joby, a lot of investors are going with both investments, trying to see which one might win or do better than the other. But is it a buy at this point when it's down? Like you said, it's up a little bit today, but It's still down from where it's been historically. Is this a good buy point?
I would not say that this is a good buy point for Archer. This news isn't a reason to buy Archer. It is a reason to believe that Joby is pulling ahead, as you say. And for people who are betting on both stocks, it might cause me, if I was, one of these people, it might cause me to think, hey, I'm going to stop putting money into Archer and start putting more money into Joby, because Joby is obviously delivering better. Its pipeline is more robust. Its advancement of infrastructure obviously just took a giant leap forward. It's really much better positioned, I think, than it was just a week ago, and better positioned than Archer.
Really good analysis on this, guys. Well, let's dive into some of the names that are coming out in the comments in the chat today. Some really, really great companies here. So I'm going to have you both look up a couple different ones to talk about. This is one that's come up before, Energy Fuel, UUUU. Chris, if you want to look that one up. And then I'm going to have Thomas, I'm going to have you look up, let's go with Atlas Lithium, ATLX. I think that's kind of a similar sector, at least at first glance, it seems like it would be. So let's talk about that a little bit.
UUU is uranium, right?
UUU is uranium play, yep.
Yeah, I think that some of our SMR companies are reporting this week. NewScale and Oklo, those should be pretty interesting reports.
Yeah, I'm looking these up right now. I want to talk about nuclear, Chris and Thomas, before you
Sure.
look into the specific one, the UUU. What has that sector been doing? I know we saw some growth in nuclear earlier this summer. Are we still seeing some growth in that sector right now?
Right. The stocks have been hot. I mean, they're up triple digits, moving higher on their pipeline improvement. Markets are looking pretty strong right now. I would assume that we get another positive string of reports. We can see this whole sector continue to trend higher. Looking at Oklo, 50 to 75. That's $25, 50%. Right. Aquila could move another $25 up to 50%, given another good report. But what we're really going to want to see is advancement of the timeline for when they go to commercial operations. That's what got the stocks moving earlier this year when the Trump administration signed all of those executive orders, kind of clearing the red tape and making it easier for them to get to commercial production. So without an advancement of that timeline, I think it's possible the stocks could have a little bit of trouble moving higher. Provided we have good results, it could be a strong move.
Yeah, so you specifically, Bridget, that's up about almost 10% just today. They're reporting earnings on Thursday, it looks like. Yeah, Thursday. There's probably a lot of investors that are wondering if they want to chase the stock at this level. I think I think you have time on this one. I don't doubt the case for nuclear fuel and uranium. It's probably past time that we're really moving that way in the United States. But this is a company that's still generating very little revenue. It's not a profitable company yet. So again, I think investors have some time here, but it's made a strong move today, and that's probably got a lot of attention on investors' radars, especially since it was one of the stocks that looks like it got whacked kind of hard on Friday, if I look correctly. Yeah, not whacked totally hard, but
yeah. Very good. Well, let's move on to the other company listed, the ATLX. Have you had a chance to look at that one, Thomas?
I have. Atlas Lithium is a lithium miner. They had been struggling with production and sales. It looks like they didn't have very much revenue the last little bit. But recent news is that they've had some much better than expected test results in some of their projects. Really ramped up the outlook expectation for them to begin revenue and begin making money again. The analysts are noticing. We've got some positive analyst comments, and all of this is being seen in the stock price, which is really what has caught my attention. The market hit a bottom back in April. Since April, pretty strong bottoming action with market volume picking up, market support rising. Today, the last few weeks, what I see is moving up from this solid support level, coming back to retest, and then rebounding sharply. Today, we've got a very sharp rebound. The market's up 30% on a record spike in volume. So it looks like this could be a reversal with legs. We're just going to want to keep an eye on that news cycle. Yeah. And remember that this is a speculative play that could really go either way, depending on how the test and the project development continues.
Yeah, there's a few different smaller stocks, more of these speculative plays that investors want to hear about, and I like to see these names. Sometimes they're new names to the channel, and we like to talk about them a little bit. So let's get into some other ones, a couple we've heard before, maybe some we haven't. MVST, this is another stock ticker I believe we talked about before, but let's pull that one up. Chris, if you want to look up MVST, and another two names that we've talked about on the channel before because they have a lot of movement and there's a lot of interest in them right now. Talking about Applied Digital, APLD, and then it looks like RBRK too. Let's look up both of those.
All right. Well, APLD is just advancing on its development of its data centers and its use of NVIDIA GPUs to provide AI infrastructure as a service. It's got a lot of analyst support, and they're leading this market higher. We're expecting them to be reporting pretty strong revenue growth and earnings growth over the next few years, and to have a very sustainable business model. Oh, they rose 11% today. That's pretty good.
Yeah, almost 40% in the past 5 days. So a lot of moves happening with Applied Digital right now. I think that the question is always, when you see this much of a move in a short amount of time, is now the time to get in? Is now the time to sit back and watch to see how well they do? This stock has had some volatility this year of going from $3 up to almost 14 range, and now it's back in that almost to the highs again. So is it time to get in? Is there enough growth ahead for this company that it's a good one to get into no matter what the price is doing?
I mean, it looks like it. They just, CoreWeave, the other big AI as a service company just exercised a lease option for an additional 150 megawatts of capacity, which just really amplifies the pipeline, affirms both businesses, with AI infrastructure as a service. And it's just good news for them together. Also for NVIDIA, I think that these stocks together have plenty of upside potential.
Very good. All right, well, let's look at some of those other names that we had there. Chris,
Yeah.
can you pull up the one?
Yeah, I'm looking at MVST right now. I'll be honest, it's a stock I'm not familiar with. It's Invista Holdings. So they let's see, they've got looks like let's see, they develop, manufacture, market, and sell dental products in the United States and China and internationally.
Oh, I think we might be looking at the wrong one. The one that I have is Microvast, MVST.
Oh, MVST. I'm sorry. I thought you said N.
This is another
Sorry.
battery company that provides for electric vehicles.
Yeah. Okay. That one makes. I was wondering. I was like, that one seems. The other one seemed out of not what our viewers are normally asking about. Oh yeah, MVST. We've talked about this one before.
Yes.
Yeah. So stocks down. Let's see, about 16% in the last week. It is going to report earnings later this week. It looks like on Friday, right after the market closes. So that's so not sure if we're going to have anything else to see on this much. It's pretty quiet from an analyst standpoint. I'm trying to see what sort of headlines here might be driving it, Bridget. I'm not.
Yeah, it's hard to know sometimes what's causing the change or not.
It does have some fairly significant short interest on it, which that may just be the catalyst right now, is that you could have just people looking at shorting the stock right now, because it's down almost 10% just today. So obviously there's some sentiment of people that might want to that might have been something that started late last week with the sell-off, and then people looking, and that might have just accelerated today. Stock's still up about 31% year to date though, so I think this might have been just something where people were taking some profits. And I'm looking at the chart right now to see you're going to want to see it find support here pretty soon, but I mean, overall, as the thesis for the company, I like it. It's in that area that you're going to want to be in terms of being in the battery technology. But again, I think this is a company that you don't have to make any rash moves right now. And I'm going to want to wait and see their earnings report come out on Friday. Looks like they just got profitable earnings last quarter, so let's see if they can repeat that again and see if their revenue keeps going in the right direction.
Very good. I do think somebody brought up in the comments here a really good point about EV. Doridio, I think, is the one asking about EVs and some of the big autos having discussions about dropping electric vehicles. Is there any more discussion we could have on kind of this market as a whole? People have been waiting for a long time to see, is this going to take off? There's all these other companies that are the picks and shovels for the EV market too, the battery companies. Are we seeing more growth in this sector, or is any of that battery company development really more going to the EVTOLs rather than actual electric vehicles?
Well, that's a really good question.
Yeah, that is. That's a great question.
Right.
What's your time? I guess, Bridget, my answer would be, I think long term, there's still a market for electric vehicles, but I think the timeline has slowed down. And
right, it had been slowing already. I mean, all the people that really wanted one pretty much had one, right? And so the growth wasn't accelerating the way it was. And like we've been saying before, like the EV market itself isn't exactly a growth market, because it's not new that's
Right.
existing alongside the ICE engine market.
Right.
It's kind of superseding it, and it's got a place within that market, and it's kind of taken market share, but the amount of share gains are definitely slowing and may not
Right.
accelerate again without some kind of advancement in the technology, because it still has expense and other issues that kind of keep some owners from wanting to have one. But I
Right.
do see a lot more manufacturers leaning towards hybrid, which I always
Right.
thought was probably the way to go. Hybrid vehicles, you get the best of both worlds. You're not burning as much fuel, but you have better range and better reliability.
Right.
It requires a lot less infrastructure. I think that with proper hybrid fleets, we really wouldn't need to have all these new fleets, these new networks of charging stations, because you just would need a few less gas stations. As long as you have gas to put in the gas tank to
Right.
fuel the motors and charge the motors, then you don't need the charging stations. So it's the EV market is changing. It's in flux. It's not going anywhere, but I don't know if any more big gains are going to be had for anybody just because of EV.
Yeah, I'm not optimistic about it in the short term. I'm not.
Right. And also there's the AV market. Like EV is here, but
Yeah,
it's like
exactly.
it's kind of like Betamax, back in the old days. It's like it was
That's actually,
it was a way to drive cars and to get greener, but it's not the long-term solution, because eventually we're just going to switch from EVs that you have to drive yourself to AVs that drive you anyway. And that's a whole nother, ball
Right.
of wax change to the automobile industry outlook, because in that future, it's possible that nobody will ever own their own car again. You'll just use your app and say, hey, I'm here, I want to go there, please pick me up in 5 minutes. And next thing you know, some car without a driver will show up and you'll get in and go where you're going.
And I think the assumption has always been, stated or not, I think the assumption's been that a lot of that autonomous vehicle will be EVs.
Well,
Very
right.
good.
So there's not going to be, internal combustion vehicles coming to your house that way. So
Right.
You're right. That could be the avenue that this is going to wind up going to, is that's where the growth for EVs is going to come, is when autonomous comes in, which then creates other challenges, like you said, Thomas, because then who's buying the cars?
Well, right. And then the thing is too, we've been talking about the EVTOLs, and Joby just bought Blade, has this network for, ride hailing and whatever. Eventually you use your app to call for a ride. Who's to say it's going to be a car? What if, you call for a ride and the best available ride for you happens to be at EVTOL? Next thing you know, it's landing in your front yard.
That'd be great. We'd all love to see it. We'd all love to see it. I do want to move us on a little bit. I'm going to go to one more stock that just popped up with this EV discussion. And then several people want to hear about HIMS, because there's some big movements post-earnings. So we'll get to HIMS too. I've got one other company pulled up too to talk about. But let's go to AMPX. This is one of your favorites, Thomas. I know it's your stock pick in our internal stock competition.
Right.
There's been some movement on this stock, quite a bit of volatility. What do you think about that one as a battery play?
I think AMPX is a fantastic battery play. So the 2 weeks prior, we've seen a bit of correction in the stock price, but that's after a nearly 100%. It's after a multiple triple-digit gain. Today, the market is up 20%. It's up after hours again. It looks like we're establishing new support at a higher level. As far as the technicals go, we've got momentum converging with the new high. We've got volume converging with the new high. Stochastic pointing higher. All the moving averages pointing higher. So as long as no bad news comes out, I think the stock price is going higher. So yeah, this is a good battery play, I think. Also goes hand in hand with EVTOLs, with drones, with AV, with all of these applications, because of its battery energy density, its output, and its ease of charging. So there's nothing bad I can say about this company right now.
Yeah, I like the consensus ratings. I have that up there too. There's still some good upside with this one too, so I think it's a good play. If you haven't looked into AMPX yet, it's a good stock to look at right now. All right, let's move on to the topic that a lot of people want to hear about. We hear you in the comments. We're getting to it right now. Let's talk about HIMS. I want to give both of you a chance to look into this one. I'm pulling up the chart right now.
Right.
It looks like earnings just happened. I don't have that post-market data on this chart, guys.
No, I
Sorry
know.
about
I'm
that.
trying to
But I
look it
think
up
that it sounds
myself.
like there's some movement happening right after earnings at the end
Well,
of market close
well,
right.
today.
let's take a look here.
So it looks like the results were mixed, but mixed in that really great way that causes the stock price to rocket higher. Revenue growth was fantastic, but it missed the consensus estimate by a small amount. But despite the top line weakness, the EPS was stronger than expected. So we have margin strength within this company, also supported by just strong fundamental growth. Certainly is one that the analysts have liked. We can expect them to continue to raise and lift their price targets. Yeah, revenue grew 72%. So a small miss is like, whatever, it grew 72%. We're going to expect to see this company continue to grow at a double-digit pace, continue to produce solid margin and solid earnings, which really is what drives the stock price higher over time.
Thomas, I have the stock going down after hours.
Do you?
I'm showing it going down. Yeah.
All right, my chart is not catching up.
It looks like it went down right after the report from about 63 something down to 55,
right,
and it's back up to 57 now.
Let me get that. All right, here it comes. Well, that's an unexpected reaction, but probably will be one that I would expect to lead into a buying opportunity. This stock is on my list for tomorrow, so y'all can expect to see an article come out tomorrow. If not tomorrow, then the day after, probably. But yeah, there's no reason, I think, from what I see initially, for the stock to be pulling back, other than that the market was really expecting strength. We got strength. So with the strong fundamentals, I would expect to see this become a buying opportunity and for us to set new highs pretty soon.
Yeah, revitalized. One of our commenters here says it's profit taking happening on Hughes, and that does sound like a possibility when you see a pretty good report, like you said, Thomas. Still good news for the company, still growth.
Yeah, it's up 162% for the year, Bridget. So I mean, that's pretty much priced to perfection there. So yeah, if the report came in,
right,
unless it was a grand slam, there's probably some profits to be had.
Well, oddly, I'm looking at this now. The analysts aren't as bullish as I was remembering. We've got 10, 13. They've got it pegged at reduce. Coverage has declined.
There was some changes that happened in this stock, in this company. I believe one of their big weight loss drugs kind of pulled out. That was the catalyst for Hughes, and that led to a really big drop in the last few weeks anyway for Hughes. But I think there's still a lot of catalyst for the company, even without that really big drug that they had. That's just going off of memory for this one.
Right. No, that's right.
Yeah, in general, Bridget, and I'll be honest, I probably have spent less time on this one than Thomas has, but I've always looked at Hughes as it's the right stock. Let me correct myself there. It's the right company for the right time. I think the business model is very much plays into where our society is going from a healthcare standpoint, from a socialization standpoint, whether you like it, whether you don't like it. This whole idea of doing things like that remotely and taking care of some medical conditions that can be taken care of in the privacy of your own home, doing it by telehealth, getting stuff done like that. I think the business model is right for the right time, and for not only for the millennial generation, but certainly for the Zoomers. Whether or not that's right for the stock, I don't know. Stock looks like it's probably a little overextended at this point, and that might be what the market's reacting to. But certainly, I think this is a company that investors want to pay very close attention to, because I think it's the right company and the right business model for the right time.
Peter Lynch had a good question, and that is now a time to get into Hughes if you're not in on this stock yet, because of all those reasons you just mentioned, Chris. There's a lot of good potential for this company, but it is priced pretty high right now. When you pull up the consensus price targets on this one, I think it gives some investors pause of is now a time to get in, even if it's down in the extended trading today, which is good news. But is now a time to get in when the consensus price target, even the high estimates, don't give you a lot of upside? Is it more kind of like that Palantir investment right now, where you're getting into it, believing that the company's going to do better in the future, even if it might be a little overpriced right now?
I guess what I would say is there's a lot of ways you can answer that question, Bridget, without it's one of those that's going to depend on everybody's individual situation. Generally, I would just say if you're doing a dollar cost averaging strategy and you're planning on being in stock for a long time, then there's probably no harm in putting a little bit of money into it now and just adding to it. But in terms of saying, would I go all in on it at the current price? Probably not. But in terms of saying, if you're going to average in and you're planning on holding the stock over time, you've probably got an opportunity there.
Yeah. I think what I would say is that now might be a good time. I think what's happened is a buying opportunity is opening. The stock could continue to sell off in the near term, the next few days or few weeks before it gets back down to a real solid support level, which could be around $50, maybe $45. And then if you start seeing market support showing up in the market action, then you can start nibbling. I wouldn't really go all in on this one again until you see the analysts start getting back on board with it, because they command a lot of market attention. And with them kind of poo-pooing the stock right now, they're going to provide a headwind that could potentially cap the gains up there around the $60, $65 level where it is now, or where it was earlier today.
Yeah, which it looks like it's fighting. I was just looking at the chart, Thomas, and it looks like it's been fighting to get past that level a couple of times just this year. It's been in May, and then again in looks like mid-June, it was like trying to get that 65 level, and it just hasn't been able to push through it. So, yeah.
Good. Well, we're getting close to our time for the day. We try to keep our MarketBeat Mondays to about 45 minutes or so. So we'll just cover a couple more. It sounds like there's a lot of earnings news that's making some major market moves right now. One to talk about, and Chris, you talked about this one on the channel before, is quantum computing, QUBT. This stock has seen a lot of extended trading movement today. Got a few people commenting about that one. And then I do want to just get to another one that's been mentioned a few times. Thomas, if you want to look this up, it's METC, Ramaco Resources. If you can look up that one, Thomas. Chris, let's talk about quantum computing. This is a popular sector, but a lot of moves all the time, and this week is no different, it seems.
Yeah, I think this is going to be a week you're going to be hearing a lot of the quantum computing stocks report. It looks like, I'm trying to see whether or not QUBT just reported today. I'm not sure. No, maybe they didn't. I don't know. The stock was up about 5% today, but it looks like it's coming down a little bit in the after hours, or at least staying steady. It's up 14.7 in the last quarter.
But if you look at the 1 month performance, I think that's where the volatility comes in. It's down 25% in a month, and I think there's just so much volatility in these quantum computing stocks to be prepared for.
Yeah, I think the thing with these quantum computing stocks, with a lot of them, especially with a company like this one, quantum computing, is there's just so very little revenue to go off of. But at the same time, having said that, this company's actually turned out to post a profit in the last quarter. So there's something to be said for that, and I think that's what's got a lot of investors excited. But again, I would be pointing to the fact that there's very, very little revenue being generated by the company. So something to watch for in terms of what the stock's going to do. It looks like it reports earnings sometime this week, but I'm not seeing when.
Yeah. Well, I think that's a good look at this one. I do want to let our viewers know, if you tune back onto the channel later this week, I believe it's happening on Thursdays when that video will post. We are going to have a quantum computing investing specialist on. He's a really great guest. We've had him on before, and he's going to be talking all about these quantum computing stocks and some other picks and shovels plays that go along with quantum computing stocks. So that's coming out on Thursday. Be sure to tune in for that one too. It'll be really interesting to see that conversation. Thomas, let's move on to the other pick. Have you covered this company before, the Ramaco Resources?
I haven't, and this is an interesting stock, though. This is a U.S.-based metallurgical coal producer. They've been struggling with weak pricing, but have recently been leaning into, more efficient operations, and that's kind of helped the stock price move higher. The charts look good right now. Looks like we have some pretty strong support around the 1750 level. So assuming we have some more good news coming out, the stock price could continue to move higher. But what that good news may be is kind of uncertain right now. There certainly is going to be demand for metallurgical coal. Domestic production, we hope, or domestic manufacturing, we hope, will begin to improve and may help demand for this company's product. But we really haven't seen it yet. So I would be cautious with this one. Buy it on pullbacks, but definitely, don't chase the price higher.
All right, very good. Well, I'm going to let us do one more just because I think I've seen it pop up a couple of times. I'm trying to pay attention to the chat and see which stocks are popping up the most. This is one we've talked about on these MarketBeat Mondays before. It comes up repeatedly. Navitas Semiconductor, NVTS. This one has seen tons of moves before in the past. I'm just pulling up the chart. It looks like it's popped quite a bit in the last 5 days, and that volume is up quite a bit too. Let's talk about this company. Any idea what's behind that?
Well, yeah, Navitas makes industrial semiconductors. One of its segments is silicon carbide power devices, silicon carbide based semiconductors, which they're more durable and they're better suited to high power situations, including with EVs, AVs. Drones, all of these advanced technologies. So a lot of its demand is being powered by the advancement of technology.
Yeah, I'm looking at this now, Thomas, and I see a little bit of a pause when you look at the consensus price target on this one. There's not a ton of coverage on it, but it does look like it's trading quite above that consensus price target. Is it possible that they really haven't, analysts haven't caught up with the value of this stock, or is that something that should give investors a little bit of a hold to?
Well, I think what we might be seeing is a market bottoming. Analysts aren't giving a lot of reason that I see to want to buy the stock right now, but there is a 25% short interest as of the last report. So if there is any reason for the market to believe that the stock, the business is at a bottom or at the point of a turnaround, the shorts could be covering. This could be a short covering rally, a short covering rally that we're looking at. Mm-hmm. And certainly there is some resistance at the critical level near 835. So I would say if we don't get above that level pretty soon and hold it, there would be a pretty significant risk of this stock selling off again. Even if we get above 835, there's still another critical resistance point near 1025 that could cap this market. So, right now it's looking pretty good, but the upside potential is kind of limited. I would be leery of getting into the stock too heavily right now, and would be waiting more for some more good news to come out, some more analyst upgrades, and potentially a move above the 1035 level.
All right, very good, guys. Well, let's see. That wraps up kind of our individual stock coverage. Anything else either of you want to talk about today that you're looking forward to this week that could move the market again? I'm expecting some more moves this week with the other big earnings we have coming out. But any final thoughts as we wrap up the conversation on what to expect this week?
Well, the one thing in my notes that we didn't talk about was the price of oil. Right now, oil prices are still trading very low, near the bottom of their 2-year range. Not really any sign of those prices picking up, which is really good for the economy in general. Low oil prices helps to undermine inflation, helps to provide a little bit of backhanded stimulus to businesses and families because they're not spending as much on gas anymore. So with that in play, I think that kind of offsets to a small degree the weakness in the labor data last week. So some weakness last week could be replaced by some strength in the coming weeks and quarters due to lower oil prices, which just helps free up spending capital throughout the system.
Yeah, Bridget, I'll just shamelessly plug our video tomorrow. You and I are going to be talking about Palantir, and it's up about 5% after hours right now. It was up about 4% for the day. So God knows where it's going to go, especially after the earnings call starts in about 10 minutes. That's always a good show when Alex Karp starts talking. So yes, we're going to be talking about that tomorrow, and I'll also have an article about that as well. Should be a fairly quiet week. Otherwise, I mean, it's busy week for earnings, but quiet news on economic data. So
Yeah.
like Thomas said, I think the oil story this morning was probably about the biggest news we're going to get.
Yeah. I think other than AMD, the earnings report that I'm looking forward to the most is Disney. Just looking for that company to show some more traction with its Iger-led turnaround. Good news there, could help get that stock price moving higher again.
Yep.
Right now, I think it's it's at the top of its trading range. We get a move to new highs, 80 to 120, $40. Yeah, this market could get to 160 real easy if we see a new high this week.
All right, all really good information, guys. Thank you so much for your time today. And thank you everybody who tuned in today. We really appreciate you joining us for MarketBeat Mondays. We cover a lot in a short amount of time. That's our goal. I love all of the stock suggestions. I'm sorry if I couldn't get to all of your stock picks today. I'm going to continue to look at them and add them to the list and see how much we can cover in our next MarketBeat Monday next week. Again, thank you for joining us, everyone. Join Chris and I live again tomorrow as we break down all of the moves from Palantir and really get into the earnings a little bit more and what it means for the future of this company too. Thanks again for watching, everyone. As always, happy investing.